next guest is an expert on the intertwined relationship between China and the West. He coined the term Chimerica. Niall Ferguson is a professor at Harvard University, a best-selling author, and a Bloomberg contributing editor. He's with us from Newton, Massachusetts this morning. Niall, good morning to you. Couple of questions. First of all, do you agree with the investors that Chinese growth is going to slow, whether or not it's going to go to 5% or not in the space of 5 years? I leave that up to you. And more importantly, why? Is it because of a slowing global economy, or is it because of the way Chinese policy is being crafted right now and the potential for a so-called hard landing?
Well, normally I'm rather more pessimistic than the consensus, and it makes a pleasant change to be on the optimistic side of this one. I think China is slowing. The data already show that. But I find it hard to believe it's going to slow as much as your poll respondents think. I certainly don't anticipate China going down to a 5% growth rate in the time frame that you're talking about, in other words, over the next 5 years. I think that's more likely over the next 10 or 15 years. The second thing is I don't think we can really see Europe as that big a driver of what happens in China, or for that matter, the United States. More and more Chinese growth is determined by Chinese policy and by Chinese domestic investment and, to a lesser extent, the growth of consumption. The reason China's slowing at the moment is that the authorities thought things were getting out of hand, particularly in real estate, and they've been applying the monetary brakes in all kinds of ways for most of this year. And yet, even with the application of the brakes, it's still not slowed by that much. So I think here the consensus is too bearish, and I think people are allowing the European crisis to make them worried about everything, and that's a typical overreaction that we tend to see in financial markets.
Niall, is that to say that perhaps the symbiosis that you so accurately and figuratively described between China and the United States has been broken?
Well, when I coined the term Chimerica back in 2007, it was intended as a pun to argue that this was a chimera, an illusory relationship which couldn't really last for long. To have a relatively poor country like China in per capita terms lending vast amounts of money to the United States was always a bit of an anomaly. And I think the Chinese themselves have been aware for some time that from the moment the financial crisis began, they had to reduce their dependence on exports to the West. And this applied also to Europe. So there is this process at work right now whereby the Chinese seek not to decouple themselves, I think that's putting it too strongly, but to reduce their dependence on exports to the West and to build their reliance on investment in their own economy and the growth of a consumer sector there. I spent much of the summer in China, and it's very interesting to watch that process happening. Of course, it's like trying to turn an oil tanker, but this is a big, big ship now. Remember, according to the IMF, China's will be the biggest economy in the world within 5 years. And so if it were to slow by as much as your poll suggests, we'd be in real trouble. But I don't think that's going to happen. A, because the Chinese themselves have still got a huge amount of potential in growing their own consumer market, which is vast. It's a fifth of humanity, remember. And B, because they cannot risk that kind of a slowdown. Their biggest fear in Beijing is a surge in unemployment, is a breakdown of the economic engine. And that's something they just can't and won't risk.
Now, Niall, you talk about this huge rebalancing that's happening within the Chinese economy, shifting more towards internal demand and consumption. But where does that leave America? You talk about this Chimerica relationship. Do policymakers on both sides, are they going to be as cooperative in the future as they appear to be right now?
Well, there's inertia in this, and I've often said that the Chimerican relationship is a marriage on the rocks, but it's going to be a really messy disentanglement. Don't expect a sudden divorce. There's huge interdependence financially. The Chinese continue to park the lion's share of their reserves in dollars, but at the same time, bear in mind that there are all kinds of strategic frictions building up in this relationship. And as China becomes the equal of the United States in economic terms, it's bound also to become more and more a strategic rival.
Niall, a quick question for you on the hard landing. I mentioned it in perhaps my first question. It sounds to me, based on what you've been saying, as though you do not anticipate a hard landing, a situation in which China would have to jack up interest rates and slam the brakes on inflation. Is it, call it a significant tail risk? Is it something that you think is perhaps something investors ought to factor in and perhaps buy protection against in some way, shape, or form?
Well, this was my big question, and it was the reason I wanted to spend a good deal of time in China. And I would say this is a really low probability scenario. Why? Because I think if you look at that most buoyant sector, which was real estate, and particularly residential real estate, sure, there's been an enormous construction boom in China, and they unleashed an enormous wave of bank credit as well as local government borrowing to finance that. That was China's stimulus. That was how China dealt with the global slowdown in 2009. But they have really applied the brakes, and what I see is not so much a bubble bursting as a bubble gently deflating. It's no longer clearly a speculative boom in real estate. At the same time, you can see slowdowns happening in other sectors, but nothing dramatic. Inflation, which was a worry, particularly the price of food, is coming down, and my sense is that the hard landing scenario is one of those black swans. It's a really low probability thing. It would hugely surprise me if it happened.
Neil, good to have your thoughts as always. Niall Ferguson, he's a professor at Harvard, a best-selling author, and a contributing editor here at Bloomberg.